Hey, good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. David, how you doing today?
I'm doing well.
And
How are you?
I'm doing well. It's this wonderful market is just being absolutely kind of crazy right now. I was reading something that some other trend traders had written up, and it's, I mean, there have been places to get some profits, but it has been somewhat for the whole year has been a challenging market. Um, and so the challenge continues, but challenges are opportunities. And David, yes, I am almost in 100% cash also. We've had a couple of small losses that have taken us to out of the market. And that's one of the reasons why we use stop losses. So I want to remind everybody that everything that David and I do talk about is for trading purposes only. Traders should paper trade any new method prior to the risk of their own personal capital. Another reminder is that David and I, we like to do presentations. We like to also talk about stocks. And if you have a group, we would certainly love to plug in. We can either be in person in the Bay Area or via a live webinar, and then we provide the recordings for that. The Art of Trend Trading, or the truth about breakouts and alternative entries. And if you have a group that has any other kind of particular interest, please let us know. We may be able to custom fit something for you, and one of us can do that. You can reach me and let me know that you're interested in that at dww@activetrendtrading.com. So let's... Okay, as of about 15 minutes ago, the pullback has commenced, it appears. How long will it last? I was reviewing some of the stocks, David, a couple of days ago, and over the last almost 3 months, we would get into a pullback, but the pullbacks tended to last about somewhere between 3 to 7 days, and then we get a rebound. And so I would be looking for that same type of action at this particular point in time. And if that doesn't happen in the same manner, then that could tell us that the market is perhaps in a little bit more severe correction. But we're getting close within probably 2, 3, 4 days of hitting that magic mark. What do you think?
On the S&P, yeah, the Nasdaq's got a little further to go, so we'll see what happens. I mean, the S&P is going to be the first sign.
Exactly, and so basically everything was accelerating to the downside when I printed up this slide. What was the big thing is we had jobs report that was very, very supposedly. The reason I say supposedly is because they've altered what they actually collect on the jobs report, but it's shown that the unemployment is down to like 5.5%, which in the U.S. it constitutes almost, basically almost full employment within the U.S. However, we do recognize that they've dropped some things out of the employment numbers that they no longer count, and so it doesn't give us a complete reflection of what's going on. But the big fear that probably is going on is that if the economy looks to be heating up enough, the Feds will raise rates. It looks like they're targeted to raise rates coming in the June timeframe. However, they may accelerate that if things look good enough. And so here's where we were last week. We were just basically saying that the indices they were continuing their upward move. They did so a little bit more this week, but they were already starting to operate in a little trading range last week. And so we were looking for digest gains, pullback, and it appears like that is happening this week. One of the charts that I like to use to give me a flavor of what's going on, and we highlighted this last week, is basically this negative divergence on the percentage of stocks above the 20-day moving average on the NYSE. And what had happened was we were hitting a series of lower lows. Therefore, less stocks were participating, in the uptrend. And so finally we get a rollover and it's breaking down today. We look for things when they get down below the 30% level for a period where oftentimes the indices reset themselves and then start looking for bullish signs for a potential bounce. And as you can see, this is, like I said, of about 15 minutes ago, I printed out this chart, and we're getting a nice acceleration back down to the downside, which in a way is good because we need to reset some of the stocks that have been running up significantly. And it also ties in with some of the research that we've been doing, David, that shows that somewhere between mid-February and March timeframe, there tends to be a reset in the indices and in the market, and that's been going on for about the past 3 to 4 years, where you just run into some March, with March Madness in the basketball playoffs comes weakness in the market, and that's what we're seeing right now. And we're having a lot of trades that are getting shook out and whipsawed around because of this weakness. So let's go to the charts real quick of the Nasdaq and the NYSE. So the reason I had Apple up here is in a couple of weeks, Apple is added to the Dow to kind of juice up the Dow. It will be replacing AT&T on the Dow. So as that moves forward, as they rebalance over the next couple of weeks, oftentimes when that happens, when the rebalancing takes place, the stock that's going into the index will have a little bit of a boost. And so we may see that in Apple over the next couple of weeks. You guys don't trade Apple that much. Well, you guys trade Apple a little bit, don't you, Dave?
Yeah, we trade it as often as it sets up. Yeah.
Okay. And so here's what we've got. We've got the S&P, and it was trading, and it had a nice trading range that was about here. And as you can see today, we have broken to the downside. We failed earlier in the week and dropped the 8-day, and then we never got back above the 8-day, and the 8-day is now rolling over. Today we broke through the 20-day moving average, and so it appears as if the next level of potential support is down here at the 2064 level, where look for a potential setup to bounce at that point. But with that being said, what has happened here recently is we've had a lot of overshoots. In other words, the market, the index has gotten down to a level where you would anticipate support, like at the 50-day moving average, and then it's overshot and then set up to move back up. That may happen here. What's the next level of support after that? We're looking at the 2040 level, and here's the 100-day moving average moving up that way. This is a good wide range sell-off today. A lot of momentum to the downside, and I think you were mentioning also, David, that this adds how many days of distribution days does this add to the count for if you're an IBD kind of guy?
Well, I don't know what their count is, but 4 in the last 6 days on either the S&P or Nasdaq.
Yeah, yeah.
Combination of the two. It doesn't necessarily mean both of them. Just either one or the other or both. Yep.
And one of the things that as we're talking is that as you see this acceleration, these larger accelerations and larger downside moves, while we were in this longer uptrend over the past almost 3 years, we weren't getting these wide-ranging days and/or weeks. They were very well contained, fairly uniform. But here recently, started going back to the October timeframe, we started getting these much greater, massive sell-offs. And so this, in reality, may be part of a larger topping pattern. We'll see. But especially if we continue to break back down below, in this case, on the weekly chart, this is the 40-week moving average, which simulates the 200. But as you can see, there's lots of support on the way down. And so if prices do blow through the 50, then watch the 100 for support. If prices, now that we've broken, if we get a bearish cross of the 8 and the 20, then watch any pullbacks up into this area for potential opportunities to get short on the indices, the S&P. So let's take a look at the Nasdaq real quick. Nasdaq, similar story, except it is holding up a little bit better. It is holding above the 20-day moving average, but it's running into close to support at a support zone between where the current price and down here about 440, 4,400, excuse me. And if that in fact breaks and the 20-day breaks, we may be revisiting the breakout point of 43.46. One of the things I did not point out on the S&P chart was this negative divergence we've been watching now for quite a while on the momentum and the TSI. This week appears to be coming to fruition, that the negative divergence, which indicates what's going on a little bit more internally, looks to be breaking down a bit more. If we finish today on the Nasdaq with the current candle we have on a weekly basis, this would be a bearish engulfing pattern, which is considered a bearish reversal signal. And it just doesn't tell us how far it may fall if it does continue to fall. So we'll take a look at Russell. Oops. Russell, similar. Russell, Russell right now is kind of the in-between index. It's a little bit stronger than the S&P, but not as strong as the Nasdaq. And as you can see, we are breaking the 20 today. And where is it stopping at? It's basically stopping at this level of support from its past breakout, right where we'd anticipate it stopping, and holding just a bit. And on the weekly chart, again, it too, if it finishes where it is right now, we're looking at a bearish engulfing, or close to a bearish engulfing on the weekly chart, which could look for potential further downside. What we want to be aware of is any working back up into the body of this candle, and if it fails there, then that may give it the momentum needed to break through the 8-period moving average, 8-period moving average on the weekly chart, and reseek this level of the 1200, or even overshoot, and it could, 1180 might be a downside target. And then you can just translate those to the index ETFs for potential downside moves. So David, that's what I've got so far. I think the market is resetting itself, and it's just going to be a little bit of time to see if it is going, where it's going to actually turn around. So you got any questions, folks? So George said the distribution days on IBD are not working over the last year and a half as a indicator. I assume that's what you mean, George. So David, you ready?
I'm ready.
Okay.
Yeah, so here we go again, and to that comment on the distribution days, yeah, it's been the last year. Almost every time IBD puts a market in correction, that's been the time to buy, and every time that the market goes into a confirmed rally, that's usually the time to start taking some profits. And so we'll see if that happens again here. I mean, like you said, Dennis, we've broken some mini support on the indexes here. It appears that we're headed for some more major support, as you outlined. So if you're in stocks and you have some profits, now's a good time to play some defense. Take some some off the table, and get ready to buy these leaders at potentially lower prices here as the market does head towards major support, and these leaders set up some low-risk opportunities for us to buy. And that is our strategy, and that this is why we don't chase stocks when the market's already made a big run. We don't like to start going out and buying stocks. We like to buy them now as they're pulling back in tandem with the indexes to support, and buying support and selling resistance. We've talked about in many of these webinars about the market being like a bowling alley, where when you hit a market that pulls back to support, that's the opportunity to throw your ball down the lane and knock over the pins as the market recovers from support and breaks into new highs, as it's done each and every time we've pulled back here. And then after that, after the market's made a big run, that's the time to sit back, have a beer, and relax and let the machine, meaning the market, reset the pins for you, set up all the pins, and send the ball back to you. So that's kind of the mode we've been in the last few weeks. And now that we're finally getting a nice pullback here, we're starting to get ready to put some money to work here. So, and that's all we're doing. We're just trading what we see. We're buying support and selling resistance. So here's the S&P, as you outlined, Dennis. We're breaking mini support today. We only have really one more down day here where we're going to see a potential support level here, as outlined by the second lower blue line here, which also coincides with the 50-day moving average. So it'll be interesting to see if that holds. You can see we're getting well oversold short term. So we're definitely in what we call the zone here, or getting close to it. The Nasdaq, though, has a little bit more room to go. It's been the stronger of the indexes. I mean, you can see where we started to pull back right here at this upward trend channel resistance. And the question is, will this support hold, or are we going to head all the way back down to here, which is quite a ways away from where we are now. I mean, it's about over 125 points or so from where we are now. So there's definitely more room on the Nasdaq to the downside, which would mean then that the S&P would likely undercut this support too, if that were to happen. So let's watch the S&P. Let's see what that does. That'll be our first indicator. And that's kind of what we're doing. We're just watching a lot of stuff right now. We talked last week about oil being a big setup, and we had a number of those trades trigger last week, and they are handling this pullback very nicely. They're trading mostly sideways, and a couple of them are doing pretty good. Here's Canadian Pacific Railway. So not just oil stocks, but oil-related stocks like fracking stocks and oil transportation stocks. And you can see Canadian Pacific. It's been in a downtrend for a little bit, had a nice rise up here, a nice orderly pullback to support at the 50-day and launched higher. And this is where we took the trade, and it's been it's consolidating a little bit today with everything else, but it's certainly been a nice trade, and we're already up a few $100 in that. And it doesn't take a whole lot in gains to make significant progress in the market. If you just made $500 per trade or $500 a week, these are your returns, pretty hefty returns. I mean, a lot of people, I think, would be pretty happy with that. So so we don't have to swing for the fences here and be superheroes. I mean, all we have to do is be patient, let the pullback come to us, let stocks come to us, and take the trades and lock in the gains, and keep doing it over and over again. And that's what we're doing. That's what we educate our subscribers on. Here's how February worked out with all the trades we opened and closed in February, and we're working on doing that again here in March, and we're going to be hopefully putting some more money to work here should the market find support here and trades start triggering. So we're more excited now about the market than we were last week. I'll tell you that right now, because it's not as super extended. We don't have to chase things, and we know that the bowling alley machine is cooperating, and we're getting close to getting our ball back here. So if you want to learn more about what we're doing and be educated more on these patterns that we look for and how we handle pullbacks and what to look for, this is a great time to get involved, because we've got a lot of really good setups coming up here, and it looks like we're going to get a good shot at putting some good money to work in a market that's not stretched, but a market that's going to be bouncing from support. And so 15-day free trial, just go to our website, sign up for it, and you get a newsletter every single trading day as well as one on Sunday, education on the market, leading stocks, the patterns. You get a watch list of stocks that we're watching, and when we do a trade, we send you an email, how many shares we're buying, at what stock, and at what price, and make it really easy for you to trade in tandem with us. So this is a really good time to get involved, and hopefully you'll do that. All right, so that's it, Dennis.
Okay, Dave. Good job. Yeah, it has been kind of a very quiet market over the last, well, not quiet, but not a lot going on. And want to encourage everybody, one, active trend trading. Basically, we just follow the five pillars of active trend trading, and trend trading in general is what to trade. It tells us what to trade, when to enter, when to exit, what strategy to use, and what to expect. And that expectancy, typically we shoot for a 60-40, 60% wins and 40% losses. If it's better than that, that's great. And over the past, 3-4 years, we've hit right at that, somewhere between 58 to 66% in our win ratio and our returns. It's been a little bit crazy, like I said, a little bit crazy market this time. We have been very conservative in our approach so far this year. We've also been doing some refinements within the active trend trading system that will be coming online more this month in March. And so my objective, I get through the first of the year. If I can get through the first 3 months of the year and we're positive, then that typically sets us up to move strongly into the latter part of the year. Here's what we've done so far, including a couple of hits that we took here in March. And you hate taking them in the first week of the month, but then you're also kind of thankful that it happens the first week of the month because you have the rest of the month. Here is a lot what's been happening with some of the stronger stocks in the IBD 50. There's lots of support failures. And what's happening is where you would anticipate, such as the 50-day moving average, 20-day moving up, this is VDSI. We took a trade basically off the 50, and it failed, and it's dropped down to a new level of support. Now we'll be watching this because if it consolidates here, but it was down a little bit ahead of the market, so we would anticipate if the market does turn around that this will bounce and go up earlier than the market. But we'll see if we get a consolidation pattern in here. But this is good news. This pullback helps reset the market's current reset many stocks for potential entry action points, and that is what is what is happening. So I just want to remind everybody that we just introduced and started this month, March, just a simple option strategies. Those members of Active Trend Trading, the premium members, and the early warning alert members can find that training on our website, and we'll be focused on both monthly and weekly options on that. Midweek Market Sanity Check had a really great session. This is our main training session for Active Trend Trading. We do it every Wednesday night at I want to say 6:30 Pacific time. Last week we did how to properly interpret indicators, and this week we will be talking about clues from the intraday charts without having to watch the intraday charts all day long. And then also we'll be adapting and bringing online more of the we've got an additional new indicator that we're adding in and replacing one of our other ones, and it's resulting in some really excellent refinements moving forward. So David, I think basically those who would like to give Active Trend Trading an opportunity, you can get a 1-month trial membership for $4.99. Go to this website here, and then if you would like to look at the other, you can go for a special introductory offer on a regular membership, down at this website down here. So David, that's all we've got basically for this week. I think, how's our time looking? Our time's, we're right about our half-hour mark, and we're about ready to start looking at some stocks. So, folks, we'll see you next week. And I'm going to broach a question with you guys. David, you shared that, you know, at the end of the month, you may be ready for a little bit of a hiatus.
Right.
Okay. And so my question for just the folks online, you know, I don't know if I want to take the hiatus with David or not. I mean, not going to the same place or anything. But if you would like to see, even if it's me solo, continuing after March with these Friday updates, please send me an email, and we'll get her done. And if there's enough of a response, it will be no problem, and I'll be glad to put some charts together, and we'll have a good time. So just let me know, please. So let's get looking at some. David, I know you guys have how. So, let me finish up. Guys, keep your egg growing and trade wisely, trade profitably. Now let's look at some charts. So, David, somebody has how.
Mm-hmm.
And if you do how, I'll do AMBA. And do you have MLBY?
Yeah.
Okay. If you want to do that one, that's cool.
MLBY or MBLY?
MBLY.
Okay.
Mobileye.
Yeah.
And you're going to do how. I'll do grub. And AMBA. So if you want to go ahead and get started with HAL and Mobileye, and I'll answer a couple of questions here.
Okay.
Okay.
Okay, so Mobileye is trading up into resistance at the 50-day moving average, where it has found resistance once, twice, and now we'll see how about a third time, short-term overbought. So, this is one. I mean, I don't know. I have a hard time shorting IPOs. I'd rather short stuff that's already made a big run and is breaking down from a big run. But definitely, if you're looking to buy it here, you got to wait for it to get above the 50-day and then have that initial pullback. And if you're looking to short it here, I mean, if it meets resistance here, you could do that. I don't even know if there's shares available to short on this because it's a newer issue. So there's that one. And then Halliburton is trading just very, very nicely, very tightly here. It's holding up pretty well with the market and most of the other energy and energy-related stocks. So so here, this is exactly what I was talking about with Mobileye. It made its move above the 50-day. Now it's doing its first pullback. It's short-term, more oversold than overbought. So it's looking pretty good, and we're going to hang with the position as a result.
There you go. Put myself on. I muted myself. So let's take a look at a couple of these other ones. And if you have any stocks to review, guys, now's the time to get them in. So AMBA, Ambarella. It basically, in this area over here, it was selling off with GoPro. This is after GoPro's earnings. And then it went on one heck of a pre-earnings run. Popped up above support, so we now have a breakout from a nice cup. And what's it doing? It's doing something really awesome. It is coming back and retesting the breakout. It did that this morning. So let's look for some consolidation as long as the 63.20 holds. I would, if this holds up well. As a matter of fact, this was one of the stocks that I had on my list of stocks that were holding up well in this pullback. And so this would be an interesting place to jump in, because if you do the standard technical analysis measurement on this, you would measure from down here about 49 up to about 63. That's 14 points, so you can measure 14 points from 63. That would give us an ultimate technical target for AMBA. And so I'm looking to be able to jump on this as soon as we get some stability here. And so, we got a real quick question, David, on the volume down on the market. It's been kind of light here lately. And so how do you interpret that for the how do you interpret that? That here we've got we're selling off, but the volume's not really jumping in.
I would say that about stocks. I'm not so sure about the indexes, particularly today.
Okay.
So, yeah, I mean, for me, I'm always more interested in what stocks are doing versus the indexes, and I see a lot of good structure in leading stocks, so that's why I'm getting more excited about the market right now.
Yeah.
And so that's what I look at. I mean, I see a lot of stocks trading either sideways or pulling back on light volume, holding support levels like the one you have right in front of you here, Grubhub trying to hold the 10-day.
Yeah, yeah. And so, yeah, that's what I'm looking at Grub. We've got earnings behind us. It made a good run after earnings, and basically it just accelerated to the upside. Taking a look over here on the, basically it is back into the resistance area from the past high. So if this is a cup, what are the kind of things we can anticipate? Wow, look at that smiley face. Put her nose right there. Those are glasses. Anyway, it may go in, put in a handle, and then move up from there. But on a weekly chart, Grubhub is showing that this is a potential shooting star, which is a bearish reversal signal, and it's happening where you would anticipate it, right at a level of past resistant, past resistant zone. But it is definitely, as you can see, this last little pullback that's happening right now between 42 back up to 44 on lower volume, and its buying volume has been, look at these ticks over here, the buying volume has been higher than the selling volume. So this is a good stock, I would say, to keep on your radar for potential trades. Not yet, but when they set up. And David, do you have LAD?
Sure.
LAD. And I'll pop back to you.
Yeah, this is a lot of what we're talking about happening with leading stocks that are in uptrends. Here we have it starting to pull back. I mean, it's broken through its short term at the 10-day, but the 50-day, where it's found support twice or three times already, is not too far away. So, and which would coincide too with one more down day on the S&P, hitting that support level that we talked about. But that will probably put LAD right around its 50-day. So that's what I'd be looking for there.
Okay, that's looking actually pretty good, though. I mean, yeah, somewhere between there and the 50-day, a little bounce back down to the 50-day, and then the rebound. But it's at support. Let's see, Dave, do you have any more stocks, folks? Do you have ZLTQ?
Yeah, so this one was a nice screamer, but it's definitely, it had come into some high volume selling over the past week or so. So I would probably wait for this one to set up a whole new thing versus treating this as a pullback, because this volume is pretty extreme and pretty big move here. I think they pre-announced earnings when they were presenting at a conference, and that's what created this spike right here.
Yeah.
And then I think their official earnings announcement was here.
Okay. And so, yeah, because after earnings was on the 3rd, and
Yeah, so that there you have it. That's the earnings day right there.
So yeah, it needs to really rebuild something right there about the 30 level, and we'll see. So, and Tracy wants to do habit. I will do habit, okay? Yep. There we go. Okay, habit. Habit and reports earnings on the 10th. After market hours, the 10th, I believe, is next Tuesdays. And it looked like it was going into its its earnings run here, because that typically happens about 2 weeks prior to. But it got caught in a downdraft, fell back down, and now it looks like it's trying to regroup and move back into a pre-earnings run.
Hey Dennis, I can't see your chart. I'm not sure others can either.
Oh,
I can't.
there. Can you see it now?
Yes.
Okay, thank you. Here's what I was talking about. It looked like it was going to go into its pre-earning run in this point, but it actually wound up selling off. It hit the support from its past pullbacks, and then over the last 3 days has started what appears to be an initial pre-earnings run, but earnings are next Wednesday after market hours, and we know it has resistance up here in the 34 level. And so at this point, it's almost too late to try to jump on this for a pre-earnings run because earnings are just too close. If it retested back down at the 32 level, it might give you an opportunity. So, Dave, I know you guys trade. Do you have Twitter?
No, but I can pull it up.
Yeah, I can whip it up here really quickly. TWTR. Okay, Twitter. It looks like it gapped higher on earnings. It gapped, as you can see. Here's one of the things on earnings that I always look for. When it gapped on earnings, did it gap above past resistance? And as you can see with Twitter, no, it did not. Now it may do one of these little, kind of hook and ladder type patterns where it jumps up on the ladder here, then hooks down, comes back to a level of support, and then goes to break this level of resistance. But if we break 50, it's probably got a good move to 55, which would be a 10% run. And if we break above 55 and get a close above that, then we're probably looking at the old highs. This latest little pullback over here, not a lot of huge volume. We got a big spike up in volume, buying volume after earnings, and then it jumped. And so, Dave, what about Facebook? Facebook and SWKS?
Sure, I can do both those.
Okay. There you go.
So Facebook came up here and looked at a prior high and has backed away from it. It's trying to hold its 10-day today. So it's actually looking pretty good. It's actually holding up pretty well considering the S&P is down 27 points right now, and it's a major component of that index. It looked like it was going to break into a new high here yesterday, but it's definitely fading with the market. But it actually looks really, really strong here. So we'll see. If the S&P were to find support at that first level we talked about, this is probably going to be one of the first stocks that's going to go.
Yeah. Yeah, what I've noticed on Facebook, while it doesn't have a lot of range and its scale isn't all that big, but it looks like it's kind of dependable, and so look for it within that trading range at the bottom of the range to buy and at the top of the range to maybe take a little bit of profits as you build a position. So, Dave, did you?
Oh, and you want me to look at Skyworks?
Yeah, please. And I'll do Abgo and...
Yeah, Skyworks is the little engine that keeps on ticking, I mean, it's a beautiful stock, and it's been a kind of a tough one to get into. You had a little opportunity here, maybe up here too, but that's been about it. It's not pulling back at all, not giving anybody an opportunity. So if you're in it, congratulations, you've got a beloved life. If you're not, well, there's other opportunities here.
Yeah, and so
it's just not giving us much to work with.
Yeah, and it's one of those that has been respecting the eight-day moving average on its just continuous. Another one that's kind of like that is Palo Alto Networks has been doing something similar, though it does seem to be stalling out a little bit.
Yeah.
And so, okay, I'm going to look at APCO, and let me see if I can switch back over. Okay, can you see my screen?
Yep.
Okay. Avago Tech. Couple of things going on here. Yes, it's been another one of those really nice uptrends over the past couple of years. It has basically broke out with earnings, jumped up to a new all-time high, and on a daily chart, it is holding up exceptionally well as volume drops back off. My drawing tool, as volume kind of drops off, as it's moved sideways. Keep an eye on what happens this week. If this turns out to be a doji or a very small spinning top, that could predict that we may move higher if prices open up above it, but it's holding exceptionally well. This would be considered one of those oh gosh, what's the IBD pattern where it's a tight pattern or 3 day,
like 3 weeks tight or whatever.
Yeah, exactly. And that could be what generates there before it takes off, but definitely holding up well with the market. Not showing us anything right now on the daily that would have us, if you're already in this one, just hang on for the profits, and if you're not in this one, we need a good setup. Another stock to take a look at is ODLF. Why didn't that work? So for Jorge, ODLF didn't pop up. Double check the. Here's a couple of stocks that we're watching. VIPS is holding up very well, and it bounced off 24 off the 20-day moving average this week. Bounced off the 24. We actually tried to enter the trade just around here but it never got us a pullback back below the small body to jump in. And now it's run back up to the resistance area between 25.75 and this 26.20 level. So this is one of the stocks we're watching, and it's holding up well. Another one, CAVM, is holding up well with the market drop, and then XRS, yeah. It's working on this triangle pattern, and it looks like things are trying to get back in gear with it. And if it does break above this downtrending line with some volume, it could be basically launching out of here for either 34 or even back up to the 36 level. And that would be, it moved all the way to 36 from its current level. That would be about a little bit over, about an 18% gain. So, do you have FRGI, Dave?
Mm-hmm.
Okay, if you can get that one, I will hit on ODFL. ODFL. There we go. Old Dominion. Isn't that Old Dominion? Yep. Okay. Couple things going on, Jorge, is that it looks like this is a V-type pattern as it bounced off the 40-week moving average, which is the 200-day moving average approximately. It's moving back up, had a real rapid ascent after earnings here, and it's now pulling back to potentially reset at either the 20 or down here at the breakout level of 76. Perhaps the something that may be instigating a little bit more of the sell-off is the price of gas and diesel has been going up over the last few weeks. Have you noticed that, David, in the Bay Area? I think I'm paying about 50 to 60 cents more this week than I did a couple of weeks ago.
Yeah, it didn't take him long to bring it back up as soon as oil started getting some momentum.
Yeah, yeah. And so if oil prices fall back down, Old Dominion may take back off. We'll see. And that's one of the things with those oil stocks. Just watch the price of oil. If this was just a fake out to the upside, those oil stocks could be in retreat very quickly. So, David, I'm switching over to you for Froggy.
Yeah, I think we had this one last week. And
yeah, I think so too.
The thing on this one is it's a great company, great stock, but it's not the easiest to get into because it just hasn't really given us a clean pullback anywhere. Yeah. And here you can see it's got some. It had resistance here in around the 64 range, so that might be an area of support as it pulls back here. It's after this wild day here. I'm assuming that was earnings. It's been trading pretty tightly, so you look for it to try to bounce at 64 here, and that would be an opportunity perhaps.
Okay. Just take a look at something. Sorry, I was looking at a chart. Did we do? I don't think we did. Did you do Nautilus?
No.
Okay. Do you have Nautilus? NLS.
What is that? NTS?
NLS, I believe. I don't think it's. Yeah. Tom, it's NLS, correct?
NLS. Okay, there it is.
Okay.
Yeah, it looks like it's completing, a nice cup formation here, and so let's see if it does what we were talking about with Grubhub, where it makes a little bit of a handle here, a little bit more prolonged pullback, and then you can take a look at it at that point.
Yep, I agree. So I'm going to switch over and do AKRX. AKRX, nice run up since, and okay, just making sure you can see my screen. Nice run up since the beginning of the year, and now it's in the process of doing a pullback. We've got a fairly well-defined levels of both support and resistance. Support down here in a zone of around 48. Resistance up here at a zone that goes from about 55.90, 55.80 down to 54. And so let's see what it does inside this box. It needs to get, either stop here and then give us some indication that, hey, I'm ready to go back up. But it is doing a nice pullback. It's close to support, but hasn't given us on a daily chart an indication that it's bouncing a little, but nothing is really saying, hey, yeah, it's time to buy me. As you can see here, momentum has fallen off, and the true strength is still continuing down. And we have negative divergence on this one on the weekly chart. So keep a look on that. That's on the TSI. And it looks like on the momentum that the momentum is pulling off a little bit. David, do you have SYNA?
Sure. Synaptics?
Yeah, and I'll take a look at Marriott. Marriott, big fast move up off, just prior to earnings, jumped above the 100-day moving average and launched off into up into this zone here. After earnings, it completed that. It's always kind of interesting to watch these stock folks when you start this earnings run and it runs up here. Here's where earnings was. Here's where earnings happen. And you always kind of say, okay, when you see a big run like that, that somebody knew something because somebody was buying a lot from 73 all the way up to 80, and then earnings it gapped higher than that. And so, Marriott's going to be a company in business for a long time. And so will it continue this kind of pace? And what is the pace here for the past year? If we just take a look at it, oops. A little bit over the past year, it has run up approximately 72%. So for a company like Marriott to run up that much, that's a big move for that. So Dave, I'm going to switch over to you for the SYNA. You're good?
Yeah, this one's just had a big, huge run here. It's kind of like Skyworks back when the market was in its last correction, and it sold off, and then it just totally took off, and then now, as we saw, Skyworks has just been this beautiful uptrending stock. It's kind of the same thing here with Synaptics, and the question is, will it give us an opportunity to get into it, because it was kind of hard to buy here when it went from 60 to 80 in 2 weeks, or a little over a week. So yeah, we're just waiting for something to set up here.
Okay, and so let's see if we have any more stocks, folks. Well, if that's the case, then okay, all right. I'll do Celgene, Dave, and then we'll sign off. Okay. Got to get my wife down. She's getting rabies shots right now. Did I tell you about that last week?
No, you didn't.
Yeah, she was bit by a mongrel dog in the back of somebody's car, and then the car went away before she could get the license plate and or get the contact from the people inside, because she said it looked like the two guys in the car looked a little bit like Cheech and Chong, and it looked like they were like rolling a marijuana cigarette, and so she said, and so that's what led her to think, I better get my rabies shots, because the dog nipped her and brought blood. Okay, Celgene is clearly consolidating between 116, 124. The extreme is 114 up to 124. It's a $10, approximately $10 consolidation. And right now the volume, you're getting this pullback on lower volume. So that's good. And so where's it going to stop? Of concern, George, if it does sell off with the market, we are getting kind of a rounded. You can connect all of those bottoms, and it's a little bit rounding. But as we say on the weekly chart, you can see it really clear. 125 for support, 125 for resistance, 115 for support, and but that's a good $10 trading range that happens almost every 2 weeks. It's moving within that $10. So it's not buyable yet, but it will be. I won't say it will be soon, but it's consolidating. It's consolidating its gain. That's all it's doing, and it's not in a hurry to go anywhere. When you get a hold of a stock like this, a lot of times, if you want to hold on to it, it's a good place to put in a option strategy to allow you to hold on to it. You can sell some premium against it for cash flow or income, and then you're just waiting for it to move and go higher. So, okay, Dave, I'm going to call it a day, and so we can get this recording up. Folks, your contact information for David is over here, and my contact information is over here. So, Dave, anything else today?
I don't think so.
Okay. Well, then I'll see you tomorrow.